I would say no to a $30 million check.
He has a wealth management and tax firm. In fact, they manage over $1 billion in assets.
I started with zero assets in 2015. I was in banking and then got laid off on the first day of my honeymoon. I was like, you know what? Burn the ships. I'm gonna make this work.
Yeah.
The old 60-40 portfolio stocks, bonds, like that's been dead to us for a while. What's one thing that does keep me up at night is what does that look like 10, 15, 20 years down the line?
What's up, guys? Ryan Pineda here, founder of M19. Welcome back to another episode of the M19 podcast. Today, we've got one of our members out of Denver, Colorado. He has a wealth management and tax firm. In fact, they manage over $1 billion in assets, and we're going to figure out what exactly they're doing to be so successful. I've got Rick Hurley. What's up, man?
Nice beer, guys.
Yeah, man. You got a podcast, and you said you're usually interviewing other people. Today,
not like this, but yeah, we try.
Yeah. So tell me a little bit about the business. What do you guys got going on?
Just a lot of growth, man. A lot of growth. We are growing at about 30% right now. I said $1 billion over in assets. Also in a tax firm, which is just going through the roof. Hard to keep up with the amount of demand there.
Yeah.
And then the two working together. You know, the grand plan is to open up and really kind of connect the whole ecosystem of family office. So tax, wealth, property management, possibly even aviation, plane management, bank maybe. We'll see. If you need it and you're wealthy, we might be doing it. So
yeah. So tell me about how you got in the wealth management game. How did you guys grow to $1 billion under management?
Well, me personally, I knew as a little kid, I invested my Roth IRA as a lifeguard money into Cisco. If you remember Cisco and Amazon, I won a stock picking thing when I picked Amazon and it quadrupled and my friends were picking Chili's and I was like, oh my God, you can make money this easy.
Picking Chili's?
I was like, I don't know. I got Amazon, they got Chili's.
Picked Sizzler, Chili's.
You're it doubles, it doubles, it doubles. This is crazy. So that was 6th, 7th grade. I knew I wanted to do this. And then getting out of school, I just knew I was going to sell something. Ended up selling, trust and kind of being the quarterback for people's lives as it turns out. But I was in banking and then got laid off on the first day of my honeymoon.
Yeah.
And my boss went to Wells Fargo Advisors and I went to JP Morgan Chase. And then about 5 years later, he's like, I'm doing my own thing. You should come. So honestly, I had a kid at home. My wife was staying at home. I had one on the way. I was like, you know what? Burn the ships. I'm gonna make this work.
Yeah.
It started with zero assets in 2015. And now it's grown. I have my own book of business with my business partner, and then we do all the investing, compliance, practice management, marketing for all the other advisors. So we have other advisors that join up under us.
Yep.
And so we've added a couple $100 million at a time when we bring in an advisor or two.
Yeah.
It's been kind of like a hockey stick since really 2018 was when we really went totally in the business. It's called an RIA, a registered investment advisor, when you have a federal charter. And once we did that and kind of looked behind the curtain, recreated ourselves, how are people making money on me? Let me look how I can do that myself. And at the time, the business was doable. I could just do it myself and really offered what I would want to offer to other people. And it's just been crazy. So
and let's talk about that, offerings. People come to you guys, they got a stack of money, millions of dollars. How are you guys deciding where to invest it?
So, we are a little bit unique in that we've, since 2015, the old 60-40 portfolio stocks, bonds, that's been dead to us for a while. It's really kind of popular now that you've gone through 2020, 2022. 22 is a good example. Stocks and bonds are both down 15, 20%. So if you had bonds, the most boring thing you could possibly have, you were still down 15%. And that was a holy crap. You have to be more diversified than that in the markets. I know you're a big real estate guy. There's private equity, there's private debt. There's a whole lot of other stuff out there.
Yeah.
And so when we look at portfolios, we're saying, all right, we're going to have stocks, we're going to have bonds, but we're also going to have all these other things. We call them alts. And to qualify as an alt, you can't be correlated to stocks or bonds. You have to have under a half a point of correlation, which means that they really don't care what the stock market is doing or even what the economy is doing, because we can make money in good times, bad times, falling prices, lowering prices, high inflation, low inflation. So when you've got 3 main asset classes and one of those asset classes can be up to 10 additional asset classes, in bad times and good times, there's always something to pull from where the people are properly diversified. So to answer your question, when we look at where to invest, it's the time horizon, how much the client actually has, when they're going to need the money, their tolerance risk for how they like to see their stuff move up and down. So it's not like a one size fits all, but it's definitely we have our core stuff, and then if you're uber wealthy, you're liquid north of like 10 mil. We get into private things where you might have some pre-IPO stuff and all
Yeah.
that. So it's in real estate. We advise on the real estate too, but like a lot of people have either way too much of one thing or way too much of another. That's all they know, and
That's me.
yeah. So my mission in life is getting to know you, man. Is you'd be like, all right, you love real estate and you get it. We see as people, especially as they get older, actually, and this is not exactly you, but like they've got 2, 3, 4 houses that they rent out. They're 70 years old. They want to travel. They don't want to be a landlord or have to pay, or like be in Germany and get a call about a water heater or something, or have 30 units in an apartment complex.
Dude, I'll be honest with you, as a real estate guy and as a known one who teaches real estate for a long time, I've become like more anti-rental as time has gone on because of the headache and the illiquidity of it. And then like I start to look at all these super wealthy people and I'm like, it makes sense why they like stocks and everything because it's liquid. It's very predictable. I mean, you could just throw it. You could just
and you
throw
can
it.
borrow on it too. Like you don't have to even sell. Like you get asset-backed line of credit, you can borrow, but you can, a lot of the real estate guys in the rent. I know you're not doing rentals per se, more the wholesale stuff, but like, you get if you want to get liquidity, you have to borrow.
Yeah.
And it's great that it's not taxed when you borrow.
Yeah.
But it's also makes it hard to like truly figure out like it's a lot of opportunity cost, the interest rates and what you're having to borrow at, and you can sometimes get at or below those rates if you're borrowing against assets on the stocks, bonds, alternative side of thing. However, I don't hate having someone else pay down your debt. I mean, that is pretty nice. So
well, tell me this, right? As we're filming this episode, middle of 2026, we're out here in Pebble Beach right now, and the market for everything is kind of like in flux. There's a lot of different things going on. What are some great investment opportunities that you guys are seeing? And what are some of these like alternative investments that you guys are,
Yeah, so I think not to overcomplicate it, but like you want things that are not correlated. So I'll give you a couple examples, like trend following strategies. AQR's got a great strategy. You have to go through me to get it, but you've got like 58 different asset classes from currencies, commodities, stocks, even bonds, but they're going to make money on the trend going up and down the futures market. So like gold, grain, Kansas City lean hogs, soybeans, like those types
just
of
random things.
And it's just futures markets. So it's incredibly liquid markets, and it does not matter what the stocks or bond market is doing because they just don't care. So
soybeans have nothing to do with Amazon.
They really don't. But I mean, if you think back to like 2022 when Russia invaded Ukraine, Ukraine makes a lot of grain.
Right.
So the price of grain went nuts. Well, stocks and bonds tanked. Grain did awesome. So that one holding, which makes about 10% of the portfolio, was up 60%.
Right.
So if you're freaking out in 2022 and you're in our portfolios, you're looking at bonds being down 15%. Your aggressive portfolio with us is only down 8%.
Right.
And because you have more diversification and something like that.
Right.
Today, we're like, they just opened the Strait of Hormuz today. We'll see how long that stays open. But we're in like some volatile times right now, right? So those trends, oil is going nuts, right? So there's other ways to make money than you might be aware of, and it's that alt bucket that really sets an elite money manager apart.
Yeah,
and allows you to diversify and take advantage of opportunities. Because too, like if one thing is way up and one thing is way down, we're not just waiting for them to come back to normal.
Yeah,
like we're trimming and buying. So we're selling high and buying low, which is the exact opposite of what most retail investors do. But we do it systematically, rules based, and you have a lot of things.
It's not emotion based.
Yeah, it's called a rebalance when you bust your tolerance bands, and over a market cycle, it works incredibly well. So
yeah. So right now, what do you think is the biggest challenge in your industry?
Man, the industry's changing so much. So like Charles Schwab came in and bought TD Ameritrade and then took trading costs to zero. So it's really, really hard for younger advisors to get in. So the industry specifically, because the financials are just so that like, we call them a custodian. So Charles Schwab, Fidelity, those are custodians. Like your money's at that place. So God forbid something happens to me, your money's still sitting at Charles Schwab or Fidelity. The challenge is young advisors getting in because they are not going to even be taken seriously until they have about $100 million under management, and to get to $100 million as a fresh new advisor is really, really, really hard. And the average advisor in the industry does not look like me. It's like 60, 65 plus. So I'm 40 today. The average advisor, you walk into most rooms, is like, are you going to retire tomorrow or not? Like that's the questions a lot of clients have. And so breaking in as a new advisor, and then what older advisors are doing with their succession plans. And I'm fortunate to sit in the middle there, where I can give advisors a way into the industry, and I can also be that succession plan for retiring advisors. So
yeah, because you're a young guy. How old are you?
40. So it works for me, but like if I was trying to get into it now, I mean, it's tough.
You're a 20-something-year-old straight out of college, and then AI's here.
Yeah, I mean, and that's another thing. I was just talking to somebody about this the other day. Like, valuations in our industry are going nuts as far as like what, a recurring revenue advisory based business.
How does it get? How do the multiples work?
Multiples, they increase. If you're like $30 to $100 million advisor, your multiples are probably anywhere in the neighborhood of like 3 to 4x your revenue. Just keep it simple. There's EBITDA numbers, but 3 to 4x revenue. After you get over 500 and you start approaching $1 billion, they go to like 8 and plus revenue. And then if you get through some tech or some tax in there, they go up. But I mean, it's a nice asset to own. People want to have it because it's a recurring revenue model. That's like the holy grail of an income, right?
Yeah.
You know what you're going to get, but yeah, I mean the challenge right now is like, so I got an offer. I get offers like weekly. But every time I look at that offer, I'm like, man, if you cut me a $30, $40, $50 million check tomorrow, which would be great, I'm not saying that would suck, but like I would just want to buy another wealth advisory firm.
Right.
And the cash flow that those investments, even though I like what I invest in, the cash flow from those investments may or may not even be more than I'm cash flowing on the business.
Yeah, you owning the business is a better ROI than
so
the
the
other
best asset you could possibly have, like I just want to buy more of what I'm doing. So I'd rather just redirect some of the cash flow I don't need into making it a bigger, better business, and maybe removing myself from the day-to-day out of it so I can have more time with you guys in Pebble Beach.
Yeah.
But like, I don't know that, right? I don't know that, this sounds crazy. I never think I'd be in this situation when I started with 11 years ago now. Like, I would say no to a $30 million check.
Right.
It's just nuts.
Yeah.
But for me, in my business, at least until AI starts taking over, maybe I'll say no.
You'll sell at the top before
I'm
AI.
going to see this video in like 20 years and be like, damn it,
I should have sold.
For now, it looks like I'm making the right choice. My kids, though, I've got a 12 and a 10-year-old girl. I don't know that they're going to want, I don't know. I don't know if they're going to want an advisor like to talk to, and like,
yeah.
I just don't know. That's one thing that does keep me up at night is what does that look like 10, 15, 20 years down the line? My average client right now, low 60s, there's real value in talking to a human being and not having, AI like hold you. Like the biggest benefit I have is not in the investments, it's not even the tax planning or the financial planning. It's holding you accountable to a plan and not freaking out when the market does something strange.
Yeah, like I'm like the biggest AI advocate there is, but I've kind of seen it in the real estate space where, these Zillows and iBuyers tried to come in and say, you don't need realtors, okay? Like you can do this transaction on your own. We're giving you the values. We'll do all this stuff. And yet the demand for having an advisor, a realtor, has exploded. Like it did not do anything.
Yeah.
And we're at the point now, because I've been in this industry for a long time, where it's like everybody knows the value of the home. There's not like...
It's not a secret anymore.
It's not a secret. I can't just go steal someone's home. Like everyone knows what it's worth. And yet people still want to pay a realtor.
Yeah.
Because it's like, dude, I see it, but I don't... this is the biggest decision of my life, Yeah. I mean, it's kind of like insurance in a way. This is how I think about it. It's like, okay, if I'm going to go pay your firm, 1% or whatever the number is to manage my wealth every year, it's like, that's a small cost at the end of the day to be sure that it's good.
Yeah, you just don't know the questions you even ask.
Right.
Right? And it's like, unless your prompt is rock solid, then you have to check, because I swear to God, it's still wrong half the time I ask
for sure.
something. And then like, it's the emotional, like making the right decision, having somebody else, whether it's insurance, real estate, or investing, it's the sounding board of a rational human being. AI tends to have a tendency to want to agree with you, or say that you're right, and so, I don't want my financial future based on something that's like a yes man.
Right.
That is terrible. That's a recipe for disaster.
AI is very yes man.
Yeah.
Hey, that sounds like a great idea, dude.
Great question, Eric.
Yeah. You guys know I love the game of golf, and that is why I started M19. It is a golf mastermind for entrepreneurs who are doing over 7 figures in their business and who want to go on bucket list golf trips together. We already have hundreds of members all across the country, and we've been to some of the best courses in the world, places like Pebble Beach, Pinehurst, Bandon Dunes, and many others. The course is the best place to do deals, make great relationships, and have fun. So go to mastermind19.com today. Put all of your money in it. What could go wrong? Well, let's transition a little bit, dude. So, we're here at Pebble Beach right now. I mean, it's just beautiful out here. And we haven't played it yet, but I'm excited for the next 3 days. What made you want to join M19?
I love golf. Golf is like a prerequisite in the financial industry. You have to kind of be good at it. So my mission a couple years ago was just not to be the worst in the foursome usually. So I started and then I just loved it. I love the escape. I love the competition with yourself. I love the fact that I could play you. I'm a 16, you're a 3. We can have a competitive game with the handicap system. Trying to explain to my wife, I'm getting into lessons here. And I told her, like, I just got to get that one. Like, when you hit a good shot, and you're like, oh, golf is fun again. Like, it happens hopefully once a round or more for you. But I told my wife, I was like, listen, you get an iron over 100 yards and I'll buy you a new golf bag. Just to get that, like, oh, this is kind of fun. Yeah. Well, she did. Now she's, I got to get her a golf bag. But it's like that hook that I saw get in her of like, all right, this is kind of cool. For me, it's like I could have the worst round ever, but I'm at Pebble Beach. Like, it's like whatever, Yep. I get to hang out with cool guys. Usually the foursome or the group you're with has something to add. Like I get recharged by meeting new people, learning new things. So this is like the perfect trip for that because the average business is doing like 10 million plus or something, and just a lot of cool guys that they all like golf, and it's a really great place to be. So even if I suck today, I'm still gonna have fun because it's I'm outside at Pebble Beach. Like how could I not have fun? And then I'll hit a good shot or two, maybe sink a putt or two, and golf would be just as fun.
Yeah, because this is your first trip, I think, right?
Yeah, I saw you in Vegas. This was my first. I joined in November and I missed January, but try to convince my wife to get to Utah next month.
Okay,
see if I can get out there.
Go bring her out with you. Yeah. That'd be
get
fun.
Her some spa days or something. I'll go hang out with you guys in Utah.
Yeah.
That's the plan.
Oh, yeah. Actually, that's an easy trip from Denver.
Yeah. A little hop.
It's easy.
Not bad.
So what are some things that you've applied from golf to life and business?
Level-headed. Level-headed. It's always the next shot that counts. Last shot doesn't matter. Your last failure, learn from it. It's the next one that matters. And never get too high or too low. Like, market's down, we're in a recession, or we're having all-time highs. Like it's gonna come. Don't let the emotions or the ego get too high or too low. And life and golf has a way of bringing you back to zero, but or at least par, if you will, to use a metaphor there. But I just like the emotional intelligence it teaches.
Yeah, we were talking about that with Will just now. Of how like you can really see somebody's like how it would be working with them. Yeah. Spending 4 or 5 hours with them on the course. You're like, does this person just lose their cool super easily? Does this person cheat? Does this person
like, you can be bad, but as long as you're fast, it's fine. No one cares.
Yeah. If you're slow, I'm like, this is how you do things.
But if you're slow, you're looking for your ball, you're throwing your clubs down, like I don't really want to play with you again. I definitely don't want to do business with you.
Yeah.
So
isn't that crazy? Like somebody could be like so good at business, and then you play golf with them. You're like, I did not enjoy that. I don't care how good they are.
I know. Like it's like that Simpsons meme where he just goes back into the bushes and like, I don't know if I want to do this anymore.
Right.
Yeah. It's like how people treat waiters. You watch that. It's how people play golf. Like you watch that, and if you don't play golf, probably hard to understand that.
I think the only people watching this play golf.
Okay.
I think if you're watching the M19 golf podcast, like I think
you probably have your algorithms messed up a bit if they got.
Yeah, I don't know why you're getting fed this. We probably got some business guys that are like, oh, I came for the business. I guess I might golf.
I guess that sounds cool.
How long have you been golfing?
Oh man, golfing seriously, probably 8 years now.
Yeah. It seems like so it's interesting. Like when we started M19, I'm like, I mean, anyone's allowed. It's not industry specific. It's just, hey, you got to be doing at least $1 million, and like that's the cap or that's the standard. And now that we've got 300 plus members, I did the poll and I was like, okay, let's see where the industries are at. And I was like, oh, we got like 20% in some form of wealth.
Yeah.
I just now call it like professional services type deal. Then you have like 20% real estate. Then you had 20% blue collar. And then you had like 10% tech and all these things. And I didn't realize, like, talking to all the, wealth type people and professional services of like, oh yeah, like golf is how I get all my clients. And I'm like, that's crazy.
There's 10 prospecting, like fishing ponds. I got, 10 rods out in the fishing, and like golf is one of those things. Golf does take a long time. So like the best way to get clients using golf is to bring a friend or a client and have them bring friends that are not. Otherwise, like, there's ways to use golf, but it definitely works. But it's a good 4 or 5 hour commitment. So if you're going to go out there and use golf as a prospecting tool, you have to be like intentional with who you're going with and the time that you're spending with those people.
Yeah.
And then, you got to keep leveling up your network. It's one of the reasons I'm in M19. To kind of now, I mean, I know 3 or 4 people just at Southern Highlands where you're
when
at,
we played.
which is sick.
Yeah.
And every time I go to Vegas, you better believe I'm calling one of you guys to hang out in Southern Highlands. So, I mean, anywhere you go now, I spend a lot of time in Naples, in Scottsdale. There's people there. Like, it's more than just like these trips, because it's like now you go anywhere and you can get on some of the best courses in the country. Yeah. Just as a reciprocation thing. So if you're in Denver, hit me up. But we'll get you out to my club, and as long as I can go to yours. But, it's cool. So far, it's been fantastic. And
what would you say to anyone on the fence that's thinking about joining?
I mean, you got to do it. It's just like, I mean, there's not really a downside. Like, you just like, if you never went on a trip, just a map of people that will like have you out and host you. Is like worth it right there. Like, there's other groups like that don't do like the business focus to it. It's like, oh, you belong to a private club, like join our other private club. Of like, no, like that doesn't really bring people together much, because
it's about the club at that point.
Yeah,
not
you
the
might
business.
be, but you're running a business, you own a business, and I'm sure the conversations we'll have today, I'll learn something from another business owner or two, and that just recharges me. And so the trips are great, the network is great.
Yeah, I love it. Last question, dude. How much do you bench press? You're a friggin' swole dude.
You gotta get some bigger swag.
I know, man. Dude. We need to double X for you, dude.
Well, I'm throwing. I can rep 315, but it's
you're repping it just for like you're warming up with it.
But my shoulders is the problem. Like I couldn't golf the next day if I did that. So I try to keep it down a little bit, but yeah.
There we go. Well, dude, if somebody wants to get invested with you, look at some of these alternative investments, tax things, where can they go?
So heirloomwm.com and heirloomts.com for heirloomtaxsolutions.com.
So HEIR.
Yeah, like heirloom tomato.
Yep.
HEIRLOOM. WM or TS, both of them take you to our tax site or our wealth site. Taxes is crazy, but they're both separate for compliance reasons. But we'll get you squared away.
Cool. Well, bro, appreciate you. We're going to have some fun at Pebble today. Regardless of how we play, like you said, we're going to have a great time.
We'll do it, man.
Well, guys, hey, go check out Rick. We will link to his companies down below. If you're ever out in Denver, Colorado, like he said, he'll go host you and go have a good time, and it's going to be great. So we'll catch you guys on the next episode. Peace.